Hi, welcome to Algoways. So today we are going to discuss a very interesting topic on how algo system works, and algo is supposed to be a systematic trading, and even then how the retail trader managed to lose the money on algo trading. There are certain reasons for that, and we will try to identify those reasons, and we'll look forward towards the end of the video what we can do to mitigate those risks. So first reason for losing money on algo is to have an unreasonable expectations. See, when I say algo, I am meaning that we are doing the index option selling strategies. So that is the context of algo trading in this particular video or any other video of Algoways. We are primarily into index option selling. So what happens generally, the people have unreasonable expectations from these algos or any algo. I'm not talking about Algoways algos. I'm talking about algos in general. So people have unreasonable expectations from algo trading. So we have to get our expectations in place and in right perspective. See, we cannot have unreasonable expectations in option writing strategies because they have limited gains. Okay, and all the algos in different ways try to minimize the risk and to gain based on theta decay or some strategies with delta directional. Okay, so what is the reasonable expectations from option writing strategies? So basically, what generally we are targeting is somewhere around 4 to 6% kind of gain. But the most important thing is that we have to limit our drawdown. So always focus on the downside and leave the upside to the market. Okay. So if somebody is having an expectation of 10%, 20% kind of thing, which are the things of past when the margins were low, so we were gaining same amount of money, right, which we gain today. But since the base of the margin was less, so that in percentage terms, those returns were very high. Like if today on a 1 lakh strategy, we gain 5,000 in a month, earlier we were getting same 5,000 on 40,000 rupees. So that was more than 10% return. But now same return has become 5% because of margin changes. So we need to understand that and we need to have the reasonable expectations. If we are having any expectation more than the numbers I mentioned, we will end up in losing money. Okay, so this is the first reason that we should get our risk and our expectations in place in right perspective. Second reason is when we deploy the algo, okay, still we keep watching the screen and do the manual intervention. We can't see generally a trader who has deployed one or two strategies. He is not able to digest the numbers on the screen, either on negative side or on positive side. Okay, if it is negative side, a typical trader will get panic and will either pause the strategy or will exit the trade and then will try to reactivate the trade, the strategy again. Same way on the upside also. If there is some profit, say some amount 800, 900, 10, 1000 rupees, he will think that he will take this profit and again reactivate. But that breaks the complete momentum and complete logic of the strategy, and this does not have in long term. So whenever we deploy a strategy, we should do our homework before deploying it, and once it is deployed, we should give it an extended time untouched. We should not touch the strategy at all. Otherwise, in long run, it will again end up losing money. The third one is wrong portfolio allocation. People who are doing a sizable amount trading through algo, they deploy more than one strategy or they deploy one strategy with higher volumes. Now it is very important to understand that if we do a wrong allocation, like if somebody is having 10 lakhs rupees and he sees some strategy somewhere of somebody's strategy or his own strategy, which has given some good returns in previous 1 month or 2 months. So historically, very recently, it has given very good return. So generally, what one will do, that he will put major of his portfolio amount on that particular strategy, thinking that yes, it has performed so well in last 1 month, it will continue to perform. So that is not the case. So what do we mean by portfolio allocation? That we should allocate our set of strategies so that on a larger portfolio we have a smooth equity curve and a very smooth drawdown curve, drawdown management. Okay, so the right allocation of strategies, considering the non-correlation between the strategies, mixing the strategies between non-directional, directional, semi-directional, positional, so that the purpose of deploying multiple number of strategies on a larger volume, larger margin, is that we are smoothing our drawdown. Okay, so deploying a right mix of portfolio is very important. I have done a video on this separately on YouTube. If someone is interested, he can watch the video and take some clue from it. So this is one of the most important facet of having a profitable portfolio on algo trading. Some people like, let me take an example of TradeTron. There was some strategy, a positional strategy on Nifty, which was doing very good because of market was good for 2-3 months. So I've seen many people deploying 10 multipliers, 15 multipliers, 20 multipliers, even 60-70% of their capital, or even 100% of their capital on that particular strategy. And everybody has burnt finger into that. So this happens quite often. We need to have a right percentage of allocation to positional strategy, to directional strategy, non-directional strategy. Okay, this will reduce your return as well, but this will definitely reduce your drawdown and the pain which you will feel having the larger drawdown. It's better to have a limited profit with limited drawdown than having a very high profit on certain period with a very high drawdown, because the drawdown phase is very painful. The next reason I feel is the depending upon others' strategies. Generally, a retail trader, what he will do, he will search for the holy grail on market, okay, uh, and think that he will select one of the holy grail strategy and deploy it. What I feel is that the more we are dependent upon others' strategy, more we will suffer. So it is better that we make our own strategy, we have our own logic, code that. If you cannot code, somebody will code for you on some cost. But it is better that you have your own strategy, so you are in control of things, what is going to happen. If you are deploying others' strategy, even of Algoways strategy, you will not know what is there in the strategy. People generally don't share the logic, don't share the uh, rules of the strategy. Though at Algoways, we share all the logic. You could see the videos of various strategies. We very clearly, very transparently share the logic as well, because there is no holy grail with anybody. If you ask somebody, they will say, no, this is proprietary indicator, our secret sauce, and all these words are prominent. But see, when we are talking about the option writing strategies, we are only, everybody is trying to gain from theta decay or some strategies with delta management when we are do the directional strategies. So there is no holy grail. So it's better to learn and then have your own conviction on some strategy and then deploy that, so that you know what is going to happen, what this strategy is going to do, instead of depending upon others' strategy. Another thing is that if you are deploying somebody else's strategy, that strategy is common in terms of common for everybody in terms of risk and reward. But individual risk and reward is different from others. Every individual has a different risk, different reward depending upon his capital and his financials. Okay, so once you have your own strategy, you can control your risk and rewards, which you cannot do on the strategies if you see from others. So this is one major thing which hinders the profitability. Other one, continuing from the fourth point, is that even if people deploy the strategy from others, there is a habit to switch the strategies quite often. Like one strategy is deployed today, and if it fails for 1 or 2 days, the strategy will get stopped and we will move on to other strategy. This is one of the most dangerous things to do, because in doing so, invariably it will happen that we will take the drawdown phase of all the strategies and we will miss the good phase of every strategy. So it will be a cascading loss in all the strategies. So this is something which we should take care. If it is your strategy or somebody else's strategy you are deploying, give the strategy a time. Decide upfront before deploying it that yes, I will not be touching the strategy, or I will not be changing the strategy for 1 month or 2 months. Okay, then only you can realize the real potential of that particular strategy. Otherwise, invariably we will be taking the drawdown phase of all the strategies which we will change, and ultimately will end up consuming all the losses of all the strategies. Okay, so this will be a very bad situation. Sixth point is selection of strategies with bad risk reward. So it is again, if it is your own strategy, you know what is the risk reward you can afford. Okay. Uh, if you choose a strategy which is from others, okay, and it has like very high risk and high reward kind of rules, or the strategy, if to gain 5,000 rupees it can lose 7,000 rupees, it is not worth deploying such kind of strategies, because if you have 3 or 4 consecutive days of maximum loss, then your account will be down substantially, 15-20% it will be down, and trading there from that point becomes emotionally very tough when we go down in 20%, 25% kind of drawdown. So from that stage, it will be very difficult for you, for any trader, to deploy the strategy next day. Moreover, there must be some additional margin requirement having those such a DD. So you decide your DD first, okay, and then choose the strategy. How much drawdown you can take. It's always better to trade multiple strategies. But if somebody is having limited capital, okay, he has to take a call which strategy will suit to his risk appetite and his expectations. So these are few points which I thought to share, because these are the things which practically I have seen people losing money in Algo also. Now, Algoways is active on portfolio level for the strategies. So what we can do to help if somebody is interested, we basically build a strategy portfolio for individual depending upon individual's risk appetite and expectations. So we have our own strategies, around 25 strategies, all non-correlated. No strategy is like a bumper profit strategy. We have our focus, as I told you, is on the drawdown. Upside, whatever market gives, we take it and move on. So we design the portfolio based on the individual client's risk appetite and his expectation, either from our own strategy pool, or if he has some idea, we inculcate that also into algo trading and build a portfolio of strategies. Second point also I covered already. Helping construct a smooth equity curve strategies can be depending upon the client's capital. Now this is very important. If every client will have a different capital to trade. So what we propose here is that we have different slabs of margins wherein we have allocated the strategy, mixing them in terms of non-correlation, in terms of their nature, like directional, non-directional, semi-directional, and positional, so that we have a very smooth equity curve, more so very smooth DD. Then it's not that we just give something to client and move away. We are there to keep the complete hand holding during the trading journey, at least initially for the 6 months, so that the client gets comfortable with the strategies And if there is any changes or any modification which he will feel he wants to do, will do that. There are people who are not full time into trading, but yes, they have capital and they want to put that capital on work by deploying the option writing strategies. So, for such people who cannot devote time during the market hours, they are working or they are not full time trader because of any other reason, they have their business all. So, we can help them monitoring the account, like doing the deployment based on the day, based on the strategy portfolio, based on his capital, and manage the complete monitoring of their accounts. So these are some few things which we can do. We can be contacted on the number given on the next slide. These are the contact details. So if any of the small services I mentioned interest you, you can get in touch with us. That's it in this video. Thanks a lot.